Okay, here's a quick look at the market for Wednesday, January the 26th, 2011. Going into today, we had mentioned that the market was still in the upward bias, so we obviously had that preference, and we were looking at potential support in around 85. Right in here is 85 as our first area of support. The market overnight only reached it was 86 and then started to move higher and broke that 92 area that we had said would be a target, not that it was a strong resistance or anything, but and we also were looking at around 88 as a potential support or resistance. So you can see in the overnight, this is what occurred overnight. This profile is yesterday's action and this profile is today's. So you can see that overnight the market got down to 86, so obviously it not quite to the 85 area, got all the way up here in the overnight and then opened here in the regular trading hours, came down and tested that 88, and was basically bought up for the rest of the day other than a pullback late in the day off of the high, came off about 4 or 5 points. So obviously this up auction remains, and that's how we're going to look at it going into tomorrow. Now tomorrow, of course, the jobless claims and the pending home sales, and then of course on Friday is the employment cost index and consumer sentiment. So there are some numbers to be released for the rest of the week here that could actually move the market a little bit. So we'll have to keep our eyes on that. But we're still looking around that 88 area, maybe as high as 90 as the next area of support. Still, as I said, with the bias towards the upside. We also like to take a look at these market profiles here, which are the profiles from the regular trading hours only, and we use those in our analysis as well. Here's our software for today that shows our trades. The blue up arrow is the long trade, and along with each blue up arrow is a dashed blue line which gives you the exact entry price. This one, obviously, you can see it very clearly. If it happens on the very next bar, then there's no dash line because you're triggered into the trade immediately. This is a short trade, which is what the red arrows are, and there was a couple of them over here, and that trade is identified with this dash red line going across here. So you can see that entry was there. Now, of course, what we try and do on our trades is combine the intraday directional bias with the intraday directional bias. And when we have a green filter like this, and this is indicating to us, by the way, that the intraday, in other words, what's going on within the current day, is confirming the bullishness. So if that's the case, if that's intraday bullish and we also have the interday bullish, then obviously we're going to have a preference for the long trade, and we will only take short trades, as we did yesterday if you watched that video, up against a known barrier, which was the 88 area. We had a nice short trade off of that. So actually the only trade we took here today was this one long trade that got long here. We exited right here for break even. It didn't quite move as quickly as we wanted it to. It moved a point against us, and then up and down, up, and then finally had its rally. So I suppose obviously if we were a bit more patient, we would have been fine, but that's really not in our trade management protocol. So just one trade today, break even, and we're still looking at in around that 88 area in particular as support, but it could easily be as high as around the 91 area. So that's really a look at the market for today. Any questions or comments are always welcome. Just contact us at info@eminidaytrader.com. Always enjoy hearing your questions and comments. And so that'll be it for today. Thanks, and we'll see you again tomorrow.